So guys, nice to see you and welcome to a new episode of Headliners. Today we will try to compare Forex and crypto market to understand the difference and the global trends. I want to welcome my guest, Eric.
Pleasure to meet you.
So, first question for you, what do you do in crypto fields and why we can talk about crypto in general? What helps you to cover all the things?
I've done a couple of things in crypto industry since 2020.
Okay.
I started at first NASDAQ listed crypto group
Oh.
of companies, and we tried to do several different things there, from trading to professional services to OEMS. And
What is OEMS? Sorry,
It's sort of order execution management system. Institutional participants that hold any kind of risk or facilitate transactions,
Okay.
they normally have a management system that allows them to send orders into the market in an efficient way. So let's say you're a fund. If you collect certain positions, you might have connectivity to 10 different exchanges, and that allows you to efficiently understand where the market is, quickly send orders, and manage your accounts. It's some sort of a management system for your internal risk.
I get it. Very interesting experience. So what do you do now in crypto field?
Kicked off Spreadfighter, which is
What-
essentially a trading terminal for professional traders that gives them real market insight, real time, deep analytics, ability to trade efficiently and effectively, and manage their risk horizontally and vertically in depth.
Okay, can you make an example of one of the most popular functions of the Spreadfighter as a product?
Well, right now the most popular function is the market scanners.
Okay.
So essentially the ability for traders to pick up instruments quickly and in real time where movement has started. What does movement mean? Movement can mean liquidity, change of or abnormality in liquidity, or activity in socials, or activity in terms of project development. The list goes on. Our guys, quants, have built hundreds of different models based on which you can scan and understand what's happening in the market, but it allows you to react quickly.
Who is the target audience for this platform? Because it sounds really professional.
It's professional traders,
Okay.
small institutionals that don't have the technical capabilities, because obviously developing quantitative models costs a lot of money. Team of researchers, backtesting, infrastructure, product, the whole lot. There are a lot of small ventures out there that have the interest, don't have the resource, but it doesn't mean they don't want the product that they can use and manage their portfolio more effectively and efficiently.
Can you maybe explain a little bit about small institutional investors? Because during my crypto journey, started in 2017, I heard a lot about institutionals, etc., but I have never ever met any of them.
Okay.
Who are these guys?
Take example of family office.
Okay.
Take example of a fund
Okay.
that attracted money from a few wealthy families, and there's a team of small group of people that manage these funds. Take example of 10 families, each have several billion in terms of wealth, and they developed an appetite in crypto. Through a consortium of agreements, they find someone who's capable of managing their funds,
Okay.
right, in crypto and diversify. Great. Now that person who's going to take responsibility of managing these funds needs to give these guys a return. So how is he going to go and manage this money? Needs to build a company, needs to create legal entities, so on and so forth. Needs to have a strategy, first and foremost. How am I going to give return to my clients? From then on, everything starts unfolding, right? It's either going to be, all right, I'm just going to go and buy Bitcoin and sit on it for 20 years. That's my strategy.
This is your real strategy, or this is like an example?
Well, maybe. There's always some fundamental sitting somewhere in the wallet. Or they might have more aggressive, or let's say high frequency strategy if they're more technical or have quantitative skills.
What the target profit for this type of funds?
The good comparison will be to compare the USD interest rates.
Because in the traditional finance, they try to overlap the S&P index.
Mm-hmm.
And in the crypto field, we usually try to be more profitable than just Bitcoin.
Yeah.
Here is the same.
It varies, right? So being more profitable than Bitcoin is a good thing to say, but you don't know. Right now, the trend has always been up. From the initiation of crypto, the trend has been upwards, right? Irrespective of downfalls. But the market doesn't always behave like this. So if you come and give somebody a 10% annual return or 20 or 15% annual return, that's a fantastic result, right? Especially if it's low risk. Obviously, when you talk about significant investments and where wealthy families, they like to keep their high risk allocations to a minimum.
What is the average size of this high risk allocations? Like around 5%?
I would say it's less than 1%.
Less than 1%.
High risk allocation is normally less than 1%.
What about crypto? Crypto included
Crypto
in
in
this,
itself.
in this 1%.
Crypto is considered to be a high risk, right?
Okay.
So crypto is normally included in that 1%, but because of the ETF movement that started happening in the market and BlackRock putting their name and their reputation on the line, which creates a lot of belief and trust in the crypto ecosystem, that takes it out of the high risk environment. So that's why ETF became so important, right? Everyone was waiting for it with a huge anticipation. This creates a new narrative for crypto, increases institutional adoption, and we can talk more about that in a minute, but also de-risks people's opinion of it, right? It's all about perception.
You are now based in London. This is the old financial center, how I can say it.
Oh, yeah.
What changed after the ETF approval?
The UK's position, and this is based on my understanding of it,
Yeah, sure.
has always been watching where the market goes, then creating standards that set an example of where the market should go. I think FCA is already see the signs of FCA creating that.
So what is FCA?
Financial Conduct Authority. So essentially it's a regulator, it's the governing of
Okay.
FCA started putting a lot of groundwork in adopting crypto and in making crypto a safe environment to invest in through regulation, control, and
Do you think it will happen later this year?
I think it's already happening.
Okay.
There are some FCA licensed crypto venues in the UK. Before you simply couldn't. But it's definitely happening. Right?
You know, when we talk about crypto market, we sometimes set a parallels with the forex market.
Absolutely.
Not with the traditional stocks, more with the forex. Maybe can you share with us some trends that you see that are moved from the forex industry to the crypto field?
This is a silent trend that people not really talking about yet, and probably will be interesting to your viewers. But crypto trades, we started calling it cryptocurrency, right? Because it came as a means of payment. What does crypto do? It helps us make payments cross-border without paying huge fees and going through a SWIFT, waiting many days. What is currency really? Currency is a mean of valuating a certain ecosystem and assigning a value to a certain ecosystem. Traditionally, it came from geographies.
Like
Countries.
geography, like a countries, yeah.
Exactly. Crypto changed that narrative completely upside down. It's ecosystem. What is an ecosystem? Nobody knows. Now the ecosystem, if you imagine we create an index here right now on this podcast, and we say an ecosystem index is the rate of usage of one layer 1 or layer 2 or the other, hypothetically, right? How busy is it? And then we need to look into the fundamentals of what is the value of that ecosystem, that usage. What does that actually do? Only then we can determine and understand what is the value of this ecosystem, what does it bring right now. Crypto hasn't really decided, and there's a lot of commotion and fragmentation because it's not yet clear. One thing which is very, very clear, it's a great means of exchange for data. It's a great payments tool. It's a great tool for tracking.
What do you mean tracking?
Identity tracking, ownership tracking, any kind of data tracking. Right? Because right now we're in big data world, so it helps. But when we compare it to the comparison that I drive with the foreign exchange is how it's traded in the market, right? Because foreign exchange take it high level, we can break it down into two markets. There's real money and there's fast money. So real money is people with real cash. They go to work, they earn salary, they go to Mercedes-Benz, they buy a car. Or they have a pension fund. Or they go and invest into an investment fund. That's real money because that drives real value and it requires real settlement. There is a cash transaction. There's value transfer from one person to another. Fast money is speculative. It's two hedge funds trading against each other on CME or in fast match or in hotspot, right? At various exchanges. They're speculating in price. They can be market making or aggressing or whatever the case may be. But at the end of that trading day, the settlement, if it's 1 or 2 or 3% of the entire trading volume, that's something. That's significant. Normally, the risk hedges out itself, and that is a speculative transaction of people speculating the real money is moving this way. Something happened fundamentally in the UK, let's say, or we're becoming crypto friendly, we're inviting Web3 businesses, we're going to do this. If something like this happens, all of a sudden there's going to be a positive influx of the economy, and the movement is going to start happening. That allows someone to speculate on market movement, right? But real money is much slower. So where is the real money economy of crypto?
I have no idea.
What's the point of Ethereum? What's the point of Bitcoin? What's the point of it's R&D and adoption and experimentation and testing phase. because it hasn't become an integral part of your life, besides some of the emerging market countries that are trying to hedge their local currency risk because of unfortunate fundamental issues locally. But otherwise, it's very hard to predict precisely. One thing I can tell you though, the institutional adoption side of things is going to change the way we interact with the crypto ecosystem, the centralized side of it for sure. An interesting aspect of that is, okay, let me ask you a question. What happens if Binance closes down tomorrow?
It will crash the market, I think, for 80%.
Why?
Because the people will lost the trust in crypto field, let's say in white crypto field.
True. The biggest risk of Binance going down tomorrow is people losing their assets because they're also hold assets.
Yeah.
The fun part is that Binance is also servicing institutional clients. Institutional clients in traditional markets do not trust their assets to an exchange. You can't come to CME and deposit money into your wallet. That concept doesn't exist. What normally happens is you have a clearinghouse, or you have a prime broker, or you have a bilateral credit agreement, and then you're allowed to trade on the exchange. An exchange doesn't care about your wallet balance. They don't have control or access. They just know that you have a certain credit limit or your...
And they just provide you a service.
Just a marketplace. And they're also not a principal. They don't take buy or sell positions.
Yeah, sure.
Can we say the same about crypto?
No, we cannot.
That's quite dangerous, right? So this is why crypto markets are very fragile. And I put huge amount of importance into development of execution-only marketplaces where big volumes can be executed safely, securely. Wash trading and print order book printing is no longer an issue. And those environments are regulated well enough so that nobody can scam the market.
So that's why we see the growth of the DeFi infrastructure, etc., because the industry needs something similar that happen in a real world assets.
Absolutely.
Say. I didn't think about it in that way because I'm a retail investor. I don't use DeFi for myself, really.
I'm curious to see how DeFi is going to develop on the institutional space. The adoption of that is going to be something very new. But I think the technology itself allows us to build products and ecosystems that service the institutional needs in a seamless way. Starting from legal agreements, all the way through to bilateral credit agreements, all the way through to settlement of assets, the whole food chain. And that's going to be very, very exciting.
What do you think? What will happen with the market, with the prices, with the volatility? After the institutional comes to this market, it looks like this market, it becomes
volatility shrinks. There's some sort of stability.
Why? What is the idea? Why volatility goes down?
Extremely high volatility like we see today is a sign of immaturity or instability of markets. Okay. Small events have massive impact.
Small events have massive impact. That's the definition of this.
Exactly, right? So like, okay, FTX went down. Okay, so what? Why do I need to care about FTX going down? How many people get arrested for all sorts of fraud and different kind of things? How many companies get closed down for different kind of weird activities? Do you care?
In general, no.
Yeah. Why do we need to care here? In my eyes, that's a small event in general in life. But because crypto is such a fragile and immature and small and a newborn ecosystem, that's a big event in a crypto ecosystem.
What needs to happen in let's say, a real market to move the prices of Apple or Tesla or Coca-Cola or other companies?
Changing in terms of stocks and stuff, but let's say, okay, now it's a stock, slightly different ball game, right? Stock has actual real value company performance.
Okay.
If I come up in Apple and they throw my quarterly performance numbers and I've blown it out at the park, yes, all of a sudden the stock goes up because everyone chases my success, right?
Okay.
If I've underperformed
everybody sells
my predictions, like something you've messed up somewhere, right? I don't know. Let's see how you're going to recover. And price starts climbing down. But crypto is slightly different, right? Let's see if you've taken trading Apple stock. You trade, I don't know, Robinhood, trading 200, whatever. All of them have legal agreements.
So I have a question. If the Robinhood goes down, it will bankrupt.
Yeah, so why does that have to impact Tesla stock? Who cares?
From your perspective, it will not affect the market.
Absolutely
at all.
Not. No,
it will affect only Robinhood.
And poor shareholders.
Interesting.
Well,
no, I agree with you. I understand the thing, but
that's how it should be, right? That's how it should be. That's what we want crypto to be like. But what do we need to do to get there, right? First and foremost, we need to break down the risk from single counterparty, which is, let's say right now, the biggest counterparty risk for crypto and biggest industry risk for crypto is Binance, right? Just one company holds custodian, institutional / retail / lending, blah, 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 the segregation of duties, Chinese walls between those, avoidance of cross functioning between different liquidity sources and directions, right? They need to be segregated, and there needs to be certain requirements similar to the FX markets. There was a good thing that crypto kind of brought to people.
Why you compare FX market with crypto market? Sorry. Why they're more similar than stocks?
Representation of value in an environment.
In an environment, you mean they are, in one way it's countries, in another way this is crypto field.
Exactly.
I get it. That's
right. You can compare it to stocks, not an issue at all. That's a slightly separate subject.
No,
That's
no need to skate just.
Right. It's a representation of value, right? I can send Ether and you can give me something. All right, you know what Ether's value is. I know what Ether's value is. We can use that to exchange goods and services. That's why it's the best thing to compare it to.
What about you? What about your crypto investments? Do you have any crypto, or do you invest in crypto?
I have some. I'm a kind of person who kind of goes into a rabbit hole before making big decisions, and I need to develop a very accurate and predictable and known strategy. Because I was quite busy in developing several businesses, my investments have been more like, oh, let's try this. So I'll come clean. I have a memecoin portfolio, a small one, but I found it amusing and funny. So
Can you explain me why the memecoins are so popular and why they're so not excited but addictable? That's why, several days ago I had a topic with one of the guys from Coin List, and I asked him, hey, what is the main narrative in crypto? He told me memecoins.
I'm sure.
Why? Can you explain it? Because it has no value at all.
Forget about coins. Why are the memes popular? Why do people like memes? It's fun, right? It's funny, it's fun.
But finances is not a fun.
But meme coins are not finances. If you treat meme coins as finances, that's a dangerous ball game.
No, it's a game.
If you go and buy Book of Meme, in 3 days they became...
do you have a chance to participate in pre-sale of Book of Meme? Because I have some friends who...
Oh, fantastic. Lucky friends.
They invest 20 Solana and then exited with $6 million. The other guys invested 1,000 and exited $1.5 million. And I have a chance to invest it. I think everyone has, because I have a special chat where we have some, I don't know we call them digans, the guys who are very deep in crypto, and they just drop a message. I can show it to you. Hey guys, I like this name. That's all that I can say. I put the 1,000, and I was too busy skiing in the Alps that I missed this.
It's okay. There's many more to come, I'm sure.
What about you?
I went into Tone ecosystem. I found Tone ecosystem memecoins quite interesting. So I think memes is more people do something for fun. I'm using the phrases of aping in, degens aping in, right? Yeah, great. Why not? Let's have some fun. So I thought Tone ecosystem hasn't been explored properly yet, or hasn't been really developed, and it has a great opportunity because of the biggest user base of any platform. So yeah, why not?
You know what I've read, that the Tone ecosystem has a lot of users, mostly in CIS market. Yes. And let's say Solana and etc. They have international community.
True.
That's a big issue from my perspective about the meme coins, because when someone in Europe or in CIS market, I don't know, in Russia want to launch a meme coin, it's very hard for them to raise several hundreds of dollars because people don't trust. But when we see these guys, let's say Boba Opa or other shit coins on Solana, collected 60 millions in less than 2 days, and then showed a picture that they bought a new house in Miami, nobody cares. So I'm not sure that Tone will have a huge pump. It's my perspective because of the users, because we don't have not enough money on this market to do these pumps.
I think the liquidity is there. It's just slightly differently distributed. With regards to, so it's basically Twitter versus Telegram.
Twitter versus Telegram. Twitter is much stronger.
Well, in terms of equal distribution of liquidity, I agree with you. That's very, very true. But I think the same people also are very active on Telegram, because that's an easier, more convenient way of discussing and preparing and engaging in active conversations. As long as you have a good enough presence on Twitter, Telegram will do the job.
You told about the indexes. What do you think when the indexes like S&P or other things will come to crypto? Because we still have no have no solution.
Well, think of it this way, right? The ETF is already out.
Okay.
ETF essentially a fund, right? It's a Bitcoin fund.
Yeah, Bitcoin fund. That's all.
Great. So now we're waiting the moment other funds come out. Let's say Ethereum ETF gets approved.
Okay.
I don't know, some next ETF gets approved. Then those can become
And then
form an
it will
index.
be index of different ETFs.
Exactly. Because indices, right now you can open, I'm pretty sure you can open TradingView, you can see an index, some sort of crypto index or whatever. There's a bunch of different iterations of it. Index has a value if that can be wrapped into a fund, let's say an index fund or a mutual fund or whatever the case may be, and people can participate in it, right? So that becomes a real market product that, let's say, pension funds can go to, investment funds can go to, and that takes real money from FX and reduces the portion of $7.5 trillion market a day to pump the currently at 240. You heard me right. 7.5 trillion a day.
Trillion a day. It's a forex market. It's
Correct.
the size of the forex market.
Size of forex market. What's crypto? 280 billion.
I have no idea.
What percentage of that is wash trading? God knows.
Okay. I started my trading and let's say financial life from forex market in 2009. I don't know. What about you? When you have a first contact with the market?
My first contact with the market was 2010.
From your perspective, how it changes for the last 14 years?
So basically, electronic trading became a thing. Because when I went into forex, most like 80-90% of trading volume was voice.
What do you mean?
Voice means
really.
Yeah. So somebody calls like, "Hey,
forex.
I want to buy dollar yen this size. Give me a price now."
Really?
Yes, that was the thing. Obviously, it was slightly more sophisticated than what you see in movies, but at that time. But the electronification of the market started then. Right, that was an era when there was a massive growth in electronic trading. That's when you started seeing first went spot markets. There was electronic spot, then it went to swaps, NDFs, and so on and so forth. The most recent explosion in terms of electronic growth in foreign exchange was the non-deliverable markets like Brazil, India, and so on and so forth. Right, electronic trading, algos, latency wars, all that kind of stuff. It became a thing that it became a subject for everybody to compete against.
What do you think? What instruments we can take from forex market, or not? We can take what we will see in a future that will be implemented in crypto field. Maybe with a Spreadfighter example or other companies.
All the products that you see in terms of derivatives, like spots already out there, futures, like perpetual swaps already out there already, options are there. It's just going to grow. For example, I'm sure we have European options. I don't remember if the American options were released, but if anything, American options were released.
I have guys derivative in the options. You mean options for the American market or for the crypto?
No. So there's two types of options, right? There's a European option, which can only be exercised at the date of expiry. There's an American option you can exercise sooner than expiry.
I know the guys from the Wall Street. There's a company called Devo. They created an option trading for the DeFi. This is a new competitor of Deribit, and I see that more and more people started to implement options in their strategies. Also on Token 2049, I met several people who started their hedge funds that uses options as a hedge instrument, that they trade this volatility, etc.
I think the one that is sort of kept behind the scene a little bit is NDFs. It's non-deliverables.
Non-deliverables options.
Non-deliverable forwards. Non-deliverable
Can
futures.
You explain me?
So think of it this way, right? Let's say in FX, let's say you can trade euro-dollar forward and settle in, let's say, euro-dollar forward 1 week. The settlement happens in 1 week. You can trade, let's say, dollar INR, and the settlement happens in a delta of USD price, as opposed to the currency itself, because the currency is non-deliverable. Then you go into the complexities of onshore and offshore, but let's take of it this way, right? So it's comparable to USDT margined futures.
Okay, I get
right?
it.
So you don't get settled in a coin. You don't need to get exposure in a coin. This is USDT, right? But not everyone wants to have custodial dealings in crypto. So I should be able to trade dollar against Bitcoin forward, settled in dollar, and not touch crypto at all. I just speculate against the market movement. So that's an interesting part of it.
I was impressed that because I missed this bull run of 2022, of 2021, 2022, and I was impressed that talking about crypto and futures, this market are so young. It's just 3 or 4 years old, because in traditional finances, all these futures, this is, 10 or 15 years old. From your perspective, what will be next step in crypto?
Options.
About trading? Options.
I think options is
I think so, but a lot of people do not agree with me. I don't know why.
Why not?
Why you think it will be the next big thing?
Because it's a perfect tool to hedge risks, right? So you can have a spot risk, you can have futures risk, or whatever the case is. I haven't taken options trading to a huge grades of depth. So the spot and forward and swaps desk has always used options to hedge their risk and to use that as a tool to create efficiency for their deliverable side of things and non-deliverable side of things. So I don't see why options till date is such a tiny market. I think it's a market maker challenge, right? And liquidity challenge. So, but once we create real money flow and real institutional flow into this market, options is not a question at all.
What do you think about, is an option is a tool for retail or not? Or it will be only for big financial?
Trading historically has been closely kept tool for people with more skills, and entry barrier was quite significant.
But after the Robinhood,
it's like now we removed all these entry barriers. The regulation will be an entry barrier for some companies potentially, but I think all of them are going to become standardized. It's going to be a level playing field for all participants. Not at all. I think it's the industry today is ready to be educated. The people today, the retail today is ready to be educated to take the next step towards financial freedom. It's the globalization age, it's the age of big data, it's the age of cross-border communication. It's a no-brainer so financial freedom is something that everyone is talking about because everything is transparent. I think people are ready to learn more now than they used to before.
So what do you do in Spreadfighter?
We'll help people learn that, and we'll help people to understand the markets quantitatively, to be able to put a number to a situation in the market and use that in their advantage. It might mean they go one direction or the other. The strategy is theirs. We provide the transparency into the markets. That is what's missing in the industry, really. Because let's say, for you to really understand what's happening with the liquidity of Bitcoin, of any kind of coin, what's happening with the project, how they're developing, what do people think about it in social media, how can you trade that effectively, and how do you see your risk? How many tools do you need to open in front of you?
I have no idea because I do not track all the things, but I think that something like CoinMarketCap.
CoinMarketCap will give you the surface level. It will just tell you that the sea is blue. That's what CoinMarketCap tells you. You don't know how deep it is. You don't know what kind of fish swims there. You don't know how many rocks are there underground. You don't know when the current is going to come and take you away. Spreadfighter gives you that depth, the full transparency of the depth.
Can you make a real example of this?
Okay, so let's say a token. I can't remember from the top of my head. I think you're going to speak to a couple of guys who will give you the technicalities of it, but I'll give you the fundamentals. So let's say there's a token that's an altcoin that is live in the market. It's not top 10 or top 20 where you have confidence in liquidity, so you're still in two minds.
So from your perspective, we have a confidence in liquidity only in top 20 coins.
I'll question that your confidence as well, significantly, because I know how exchanges create their books.
I get it.
But which is completely insane. I think there's like 2.5 men of liquidity providers and 7,000 exchanges.
Really?
You send one order, every single exchange dead. It's like, come on, there's no liquidity, right? There's so many. How many real market makers are there? What is their real depth? And how many tier 3, 4, 5 N exchanges copyware books from everywhere else?
From your perspective, what are the real depths of the market? I don't know. Let's take in millions of dollars. Let's talk about Bitcoin.
Spreadfighter is going to help me quantify that, and the guys are building a model to look at that. Well, this is one of the problems we're going to solve.
That's what you do. Great. That's what you do.
But I'm going to do a finger in the air based on feelings, because the model
let's make like this.
I think at least 50% of it is wash.
I spoke with market makers and they told me that 85 to 90% is wash.
Thank you, market makers. Now I feel a little bit more at ease with my feelings. Turned out to be I'm a bit of more optimist than they are. But yeah, the market is crazy. There's no liquidity in the market. So if you open one of those statistics tools that tell you daily trading volume, it will tell you something around 280 bill a day. Crypto trading volume, right? Spot, futures, all them together, approximately.
In that case, you need only several tens, I don't know, 10, 20, $30 million to move the price wherever you want.
It's
because
crazy,
you
right?
will have no resistance.
Yeah, plus you have leverage, so the actual capital required is much less. So yeah, quite dangerous, eh? So that's why we need Spreadfighter, so that you can see exactly what's happening, when it's happening, when to get out, when to get out. Get in, when to get out.
So you're an advisor of Spreadfighter?
I'm the CEO now, as of recently. I started as an advisor. I know the guys personally. And they gave me an honor of being a CEO.
What is the biggest challenge for you right now?
Time. Time is the biggest challenge because we need to move fast. We need to deliver for the markets. But otherwise, I think we're quite all right.
Coming back to the main functions, etc. So how I can use, as a retail investor, as a retail trader, how I can use the platform?
Let me ask you one simple question. What kind of trader do you classify yourself as? Are you a professional or an amateur?
Amateur. 100%.
Amateur trader, great. So
what is the difference between amateur?
Amateur is someone who doesn't do it for a living.
Amateur trading.
Great. Yeah. As an amateur trader, you can start from the basic. For example, technical analysis, right? We have a few models that collect data, do the analytics, use artificial intelligence to give you technical analysis instruments. On our roadmap, we're building an academy to help amateur traders to convert into professionals. But even as an amateur trader, if you have the basic technical analysis understanding, you can use the tool to automate that for yourself. So instead of looking for coins where some triangle has drawn or something happened, right? You can use a scanner and it will be drawn for you. So it makes your life easier and you can react quicker. If you haven't read, I highly recommend Flash Boys. Latency wars, right? FOMO we experience as retail traders. Oh, I missed the opportunity. Oh, this book of mem came out and it became $1.5 billion valuation in 2 days, right? If you had something that showed you the movement quick enough, you could have probably, maybe you wouldn't have started from zero, but you could have caught 70-80% of the move.
It's not enough to have a Spreadfighter. You need to know how to use this to understand all the things.
Correct.
So it's more about, I don't know, education or something like this.
Absolutely. So that's why we're also, so our product is split into 2 verticals. You have a platform side of things, and you have the education, the academy side of things. We have great plans on wrap this around gamification, so it becomes a more enjoyable experience for the user to go through, as opposed to something too serious that they'll get too stressed about.
How many users do you have already on the platform?
8,000.
8,000 users. So
with no marketing.
With no marketing. Who is these guys? They're just traders, amateur traders, or pro traders?
More of them are professionals, I would say. Slightly more experienced traders, I would say, right? So it's not newbies, but it's more experienced traders. Some do it for a living, others do it for as a side activity, but all of them have basic experience. And the more experience they have, the easier it is for them to sort of convert into a user because it clicks immediately.
You know, it's really interesting when we're talking about leave for the income from trading. I don't know how much years you need to spend or what you need to learn to become this type of guy, because in most common things, from my perspective, trading stops you from your development, because I'm as an entrepreneur, once I open a deal, it's completely took all my attention.
That's the trading psychology, which is biggest part of trading. So technical skills is something everybody can learn. The psychology and the mindset is what differentiates a successful trader who can do it for a living and create a lot of wealth from it, to someone who just gives up, even if their results weren't that bad. Put it this way, not everybody can be a salesman.
Sure.
Not everybody
can be a trader. That's same.
Exactly.
Do you have any similar products on other markets, on stock markets or on forex market?
So we got inspired by the institutional side of things and by what professional traders have on their dealer boards. So now let's say there is a prop fund or family office or a hedge fund. They use tools on their dealer boards to see what's happening in the market.
And to make a decision.
Exactly. We got inspired from there and we decided to bring that for crypto traders. Because in traditional finance, it's all over different desks. Also, the entry barrier is very high. The price is very high, right? Let's say, don't even go to the professional trading infrastructure, which has a great deal of cost. Just data. You want to subscribe to CME, you want to subscribe to EBS, you want to subscribe to Reuters and get data, it's going to cost you 30, 40, 50, 100K a month, right? Crypto data is free. Subscribe by all means. It's public information.
Yeah, I get it. This is more about professional investments, professional trading, etc. Because I always was on the retail side, and we don't use all this data. We usually see a triangle, and wants to predict it will goes up or down.
Absolutely. But look, there's a way of drawing that triangle too. If you're drawing a triangle on castrated data, then your triangle is wrong. Even if you do draw a triangle.
You know, this is the most common question I ask everyone. What about the triangles? How it works? How it happens? Why we see a triangle on the market, on a chart? Who created this?
Look, it's a very simple fundamental theory of accumulation, manipulation, and distribution sort of thing, right? So triangles and those kind of formations, they're an accumulation. There is an auction is happening. People are actively buying and selling, and there's some sort of agreement at that price.
But
right?
on a crypto field, if you don't see a lot of people, we don't see a lot of retails, and we see these triangles on every instrument. This is all manipulation, and I'm not talking about...
Oh yeah, absolutely. There are tools there that will allow you to print any kind of chart you want.
Oh, really?
Well, I'm sure there are.
So you can like build a model, push a button, and then it will manipulate a price the way that you want.
Unfortunately so.
I think it's cool. It's cool to be that guy who can write this type of software. Maybe it's a little bit illegal.
Well, it depends for what purpose, right? If you're doing it to manipulate the market, or if you're doing it to rug pull people, yeah, great. It's illegal. But if you do it for R&D, yeah, you can do whatever.
But imagine how it's cool. You can create your own triangle, then goes up and then immediately goes down.
No, absolutely.
Everyone goes short and you go up again. That's what we see on the market every time.
The reason why not too many people go in that direction, because that in itself costs money, because you have to move the market, then you have to take it down, then you have to move the market again. So if you have some money to burn and you want to have a laugh at it, then sure, why not?
In 2024, I think that we have not an era or a year, I don't know how to say it, of these softwares, because
Yes.
I met more and more people that started to implement their software tools also for trading, like HFT software, algo trading bots, and also CoinGlass. Maybe you know about the liquidity.
Yeah.
Maybe we can speak a little bit more about fundamental things.
Sure.
Like I'm familiar with CoinGlass and with the liquidity, chart, liquidation map. It's like when they show all the orders on a map.
Just the old orders that got liquidated, how far they went down.
Liquidated a lot of people. I think that they don't understand why the market always go to these zones. Let's say now we have Bitcoin price around 65. Then we have some people who sell, some people who buy. And we see that all the stops for the buyers, around allocated
65.
around 62.
Yeah.
And the price 100% will hit 62. Will turn around immediately and go, to 68.
Yeah.
How it works, I cannot understand really, because we see this and then it happens.
I've experienced that personally too. So when I started trading personally crypto,
Do you do it?
right now don't have enough time to commit to it, similar to yourself.
Okay.
But I started from getting curious about learning how to trade and so on and so forth. But my interest was more about the theory and the swing side of things, as opposed to scalping, 'cause too time consuming. And I've read a couple of books about Elliott wave theory. This is a theory from a very long time ago when electronic trading wasn't even a thing.
Do you remember these days when the guys made a call and see the chart?
So I don't remember those days because I wasn't there in those days. I think I wasn't born when Elliott Wave wrote his theory. But people would take data from the newspapers. This is the time when Elliott Wave theory got created. Basically, a simple thing, it tells you that this market has impulses and corrections. And every impulse has a set of impulses and corrections, right? Just at a high level. If you take his theory and the various numbers and metrics and rules that apply to his theory and layer it over a Bitcoin chart, it's a perfect match.
The question is why? I can understand.
I'll start, why do Fibonacci numbers work? There are several things, I would say. I think some people tune their strategies to some of these parameters, and there are some algos running in the background using these strategies and relying on these numbers, and they have certain stop losses and limit orders very around specific numbers. Plus there's psychological numbers. For example, 69 or 70,000 is a psychological number, 80,000 is a psychological number. Think of it yourself as a trader, right? When you put a stop loss somewhere, let's say you have a massive position. When you put a stop loss, what are you going to do? You're going to put 70,100,934, or you're just going to put 71,000, done, finished. Easier, right? You're not going to sit down and type in 5-6 different numbers. If you do, your brain is going to ask you, why this number? Why not 2 more or too low? But 71,000 is a round number. People like to operate in round numbers. So if it's retail, it's going to use round numbers.
How many years we can continue to work on this Wild West market?
Oh.
Because I think that we are on a final stage of this crypto
outlaw.
Yeah.
Yeah. But look, I think crypto Wild West is going to come to an end, in my opinion,
very soon,
within 5 years. I believe people will still enjoy decentralized, the benefits of decentralized crypto ecosystems, but the risks associated with centralized are going to reduce drastically. By the time we get to those stages, I think we're going to go through some turbulence, as sort of needed. You need to break something to make something. But such is life.
Can you explain why everybody expect the bull market on altcoins?
It's a liquidity. It's just flow of liquidity, simple as. So all starts from Bitcoin. It's hierarchical model of pyramid. It starts from Bitcoin. As Bitcoin appreciates and gets more boring, people take certain profits from the fundamentals and diversify them into...
That's what everybody talking about, but I didn't see that, guys. I don't know. Let's say you and I, we have $100 million.
Mm-hmm.
So what we will do, we'll sell our Bitcoins, buy Ethereum. Ethereum will grow, then we'll sell Ethereum and buy Solana and other coins, and then we will move from one token to another. That's how it works.
That's literally how it's worked since the inception of crypto. But the question is why? Right? Why do you go from Bitcoin to, let's say, Solana? The only reason why you go to Solana today is because the memecoin volumes are growing nuts and the transactions are going high, the usage is increasing. Right? If you're a smart investor, you only look at the adoption of an ecosystem for a specific use case. If you just see, the project sounds good, but has no real usage or no adoption, or no actual use case for that adoption, it doesn't make any sense.
Do you know any coin that had a real use case, except...
Just technical use cases, right? Those are technical theories.
This is a blockchain for blockchain.
Correct. So that's what I'm saying. This is how we started our conversation, right? We're saying, right, these economies are being built, which fragmenting the entire space, right? That's why you have all these bridges between these chains, and then they get hacked. But besides that, we're creating all these ecosystems because we don't know what we're building for what exactly. We know that there's a technological opportunity. There's an opportunity to make things faster. Solana. There's an opportunity to make things more reliable. Something else. There's an opportunity to do this. There's an opportunity to do that. Great. We've done all these things. It's R&D experimentation and trying to fit something into real world. But most of these attempts are going to be fitting square peg into a round hole. It's not going to fit, so it's going to die, and something else is going to be more sticky. But transaction speed is important, resilience is important, security is important, reliability is important. Solana dies every other day because of memes. Transaction cost is important. All these things are important, but then because of this hype and this desire to invest into R&D of a future economy or future currency or ecosystems of value, there's a lot of experimentation, and that's good, that's healthy, it has to happen, because only this is how we'll be able to say, okay, this worked and this is why it worked, and this is not going to work because so and so. I think we have to go through this period to come to a more mature stage. It's common sense.
Insight that I get that with this crypto was created a new market, because 15 years ago, this market doesn't exist at all. It was, commodities market, stock market, and forex market. And for me, in 2009, forex market was something new because I just saw an advertising of it. And now we have a crypto market, crypto with a lot of projects. And if 10 years ago, it was only Bitcoin, 8 years ago it was Ethereum. Now it's thousands of assets, if you can call them assets, on this market, and it's become normal. It's like Forex 15 years ago. I'm not sure, but if you'll check the volatility on the Forex market 15 years ago, I remembered how I was liquidated on a Japan yen in 2011 13 years ago, it was more volatility on the market from my perspective than now.
Yeah, sure.
And we can set a parallels with crypto, and it will happen here sooner or later.
Absolutely. But besides the new market, we created a new economy. It's a whole other thing. How does the value of dollar get determined? How does the value of AED get determined? Country has either production or debt or speculation, doesn't matter. Let's keep it simple. Production. If the country produces certain goods and supplies it to the world, the value of the currency grows. If the production reduces, the value of the country drops. Or gold reserves. Classics, right?
I'm not agree with it. Let's say why the exchange rate, we're talking about forex, of AED, United Arab Emirates dirham, and dollar doesn't change to each other for the last 10 years. It was maybe 15. It was 365 or 366 for the last 15 years. Why?
You're talking about cross-economic relationship. My assumption would be the oil side of things.
You mean the general?
Correct. My assumption for this specific use case, I think oil has a lot to do with it. It's mainly traded with dollar, and there's a massive manufacturer. But besides us going there, I'm talking about the fundamentals of a currency. What's the fundamental of a currency?
Economy of a country.
Economy of a country, or gold reserve, or something
or
like
gold.
that,
No.
right? Whatever the case.
Okay,
It used to be gold reserve, it became debt now.
Okay.
But economy, right? Crypto created a new economy because a currency belongs to a country's geographical location. Crypto created a global.
Belongs to the.
Right. So we're redefining the economical boundaries right now.
Agree with you.
This is where we need to look at, because if we miss this point, then we can't try to imagine in which direction we need to think. How do we build our businesses so that we can fit into a new economy? All the setups for forex, for equities, for all these things were created because there was a definition of a currency. Currency is defined. We know where it starts, we know where it ends, we know how it's evaluated. Tell me a definition of a crypto. Where does it start, where does it end, how is it evaluated? We don't know this yet. That's why we need to watch that very closely. The moment currencies, geographical currencies, are going to start playing a fundamental role and creating a new, more gray or floating economies, the crypto ecosystems, and they will become financial ecosystems. And it's going to create a democratized global participation in those ecosystems. This is going to change our lives in a different way.
Guys, we are done for today.
Thanks a lot.
Thanks for watching. Do what you want to do, because you are the only guys that can solve it. See you.